Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. It's the first ever Tuesday monthly expiry for the Nifty. No fireworks, so to say, extremely flat at the juncture. Yesterday, the market was moving in a 200-point range. Today, the Nifty is moving in a 150-point range. 24,731. That was the intraday high for the Nifty. But now, of course, we've cooled off, below that 24,650 mark as well. And, extremely flat. Just about moving in the green and red territory. But if we end, lower again, it will be an 8th straight day of losses for the index. But the good part is that the Bank Nifty has managed to keep its head above the water. It's up 0.3%. Remember, it's the RBI policy tomorrow, and ahead of that, banks are, holding their fort. In fact, the PSU banks are extending their gains. In fact, top sectoral mover, the PSU banking lot. And aside of that, if you take stock of other sectors that are doing well, autos are doing well ahead of auto sales data that comes out tomorrow. You also have other sectors that are not doing all that well, and they are the likes of pharma extending their losses. You also have the metal pack that's actually doing well today. So yes, sectorally it's a mixed picture, but the broader end of the markets are not looking all that great, although they're not trading with deep cuts, but there are some stocks that are witnessing deep cuts, the likes of KPIT Tech, Subros, etc. We'll take stock of that as we go ahead in the show. But advanced decline ratio, once again tilted in favor of declines, marginally so. 1285 advances to 1530 declines. So all in all, no major fireworks. The trend remains the same. We started the day on a positive note, just like yesterday, built some traction, but gave up most of the gains in the second half of the session. We'll take stock of all the mid-cap movers, later on in the show. But, let me bring on board our first guest for today then, without any delay. Sandip Agarwal, Fund Manager, Sowilo Investment Managers, joining in this morning. Sandip, great to have you on the show. A lot of good news has been sold into, we started September on a great note, unusually strong. It was going unusually strong for the market in the month of September, but then all the tariff tantrums started once again. IT, pharma, yesterday, films and wooden furniture, etc. So, tariff tantrums continue to weigh in on sentiment. But here on, do you see any positive trigger that may at least turn the tide for a bit? Because earnings wise as well, markets have got a whiff that second quarter may not be all that great. What do you feel?
Yeah, hi, good afternoon, and thanks for having me on the show. So, there are two things which market hits most. One is that, when the earnings downgrade cycle starts, and second is when there is uncertainty. Right now, earnings downgrade cycle, I think broadly is over. But, uncertainty has jumped up quite a bit because of this tariff and everyday new news coming. So, all barriers have been actually breached. So, basically, there was a view that the tariffs are applicable to goods, but slowly we have seen that indirect way of hurting even services has started. So I think because of uncertainty, market are not able to hold up and they are not able to sustain and go up. But this is the typical market where it makes bottom because they are not falling either in a big way. Yes, there are some stress points in some pockets. That's true. But I believe the reforms which government has done, right from income tax exemption limits and the GST reforms which has happened, these are very long-term growth drivers, and they will definitely push up the economy, give more money in the hands of the people, and it will be a structural, uptick for sure. But at the same time, because of the uncertainty coming from external markets outside India, I think people are not able to commit, and FI sales is not stopping. Another thing is that we have to remember that the green shoot is very clear that not only this reform, but in the Indian market has massively underperformed the emerging markets, and that reversal will definitely happen at some point of time. So I think from here, limited downside, some time correction is possible, but I don't see a big downside. And I honestly believe that with earnings season coming in, while numbers may not be great, which is already discounted, but the commentary looks very robust. The capacity utilizations are at peak. So you will also see a big positive on the private capex coming back. So we are very, very positive or constructive on the market from a longer term perspective.
All right, very positive, constructive on the market from the longer term perspective. But what would you really do? Because today it's the end of the first half, it marks the end of the quarter as well. Time for portfolio cleaning, so to say. A lot of people do that. So, if one has to recalibrate their portfolios, what would be the place to look at now in this market?
So, we have a very clear view that the next decade belongs to manufacturing because, continuously the capex which is happening, the machining part of that is consistently becoming lesser and lesser. More and more ancillary products and machine parts are being made in India. So, we are very, very positive from next decade perspective on the capital goods, particularly companies which are making small ancillary parts and forms part of capex for the industry. Second, we are very positive on the water theme, and third, we are very very positive on the platform theme and some portions of pharma. So these are our preferred bets. What we don't like is primarily the FMCG and the technology software services side. These two spaces we are avoiding. We have some preferences within the banking, but not again very big because we would like to play them the banking theme also through capex theme.
Hmm. Okay, got your point. You said that you're not very, bullish on FMCG. So how do you play the theme of GST cuts? Consumption. It will of course spur demand, and consumption will benefit. So which end of the spectrum would you look at when you talk about consumption, if not FMCG, discretionary, and which other pockets? It's a wide universe.
So, the way we look at it is that whenever the per capita income goes up, right, at different slabs, then
Hmm.
the increase in per capita income, a substantial portion of that goes in upgrading of the products and the lifestyles. So, we are very positive from long-term perspective to play themes which are very expensive, like expensive car dealerships, expensive watch dealerships. All these themes we are very positive, and the market size of them is very big. And see, FMCG we have already seen last 5, 7, 10 years because of falling fertility rates, falling population growth rate. The volume growth has been minuscule. Whatever 5, 6, 7% growth is coming is because of continuous price hikes, which is also impact of lower grammage. So we are not very keen on that theme. I think
Hmm.
our markets are saturated from FMCG. FMCG is now not that buy at any price kind of strategy. So we are now looking for where the incremental money comes and how much allocation it gets. So that place we are very very bullish on the very life cycle upgrade products, very expensive products which reflects the
Hmm.
higher per capita income. We want to buy something which deals with expensive watches. We want to buy something which deals with expensive cars. So everything which is expensive and making up the value chain, we would like to be part of that
Hmm.
theme rather than buying the traditional, the FMCG companies
Okay.
which are the consuming side.
Hmm. Hmm. Okay, so premiumization, so to say. So where does auto fit in? We've already seen a large part of the rally play out for some of these auto names, especially the likes of Maruti, Hyundai, etc. Now, of course, under a bout of profit taking. But how much of the GST driven benefits are already in the price when it comes to autos? Of course, we are expecting September sales to be better. Mixed picture because of course we had the Shraddh season, and then we had the GST cuts kicking in from the 22nd of September. So whatever up move that we've seen in the auto pack till now, how much of the GST benefits are already in the price according to you?
So I honestly believe that a large portion of those benefits are already in the price. So if you see two-wheeler probably will go back to 2019 numbers again now. So it has taken 5, 6 years to even reach that
Hmm.
high which we made. So it takes time, and I think a lot of these benefits are already there. But let me put it this way that this cuts, if they are passed to the consumers in longer term, they will definitely trigger much higher spend going forward also. And the if the industry growth rate was, let's say, X percentage, I definitely believe that on a structural basis for next 3 to 5 years, that will be X plus 2%. But unfortunately, fortunately, the stocks have priced in all of that also as well. So we are not, we like the sector. We believe there is some upside, but there is no big upside from here, in my opinion. Everything on the stock price has been already upfronted.
Hmm. Okay. Most of it has been upfronted. Of course, tomorrow is the RBI policy, Sandeep. What are your expectations? What would the market be hoping for? Because the street is fairly divided in terms of the expectations. Some believe 25 basis point rate cut should come by. Some say that perhaps a pause is warranted. Which camp are you in? And from a market standpoint, if at all there is no rate cut, what would you look out for in the RBI governor's language or tone, so to say?
So, I am in the camp which believes that when you have to restart something, you have to upfront everything. And we were in the same camp when, RBI cut 75 basis point also. We believe that it will be very aggressive cut. I still believe that tomorrow also we will see cut because see, we have to give cut because the inflation numbers, if you go into deep, you exclude gold and few of the commodities, then the inflation numbers are not so high. So there is a definite scope for cutting down more interest rate from here and give a booster to the economy when it needs most. So, government has done a lot on the GST side, income tax side. RBI has done a substantial amount of cut, and one more cut I don't think changes anything. Only thing is, we don't know what is the tolerance limit for the INR for RBI, where it wants it to be. Ideally, in the
Hmm.
current situation, they should not control the INR too much. They should let it slide a little bit more because we it will indirectly help some to absorb some of the tariff impact which is there. So I believe that
Hmm.
RBI will definitely upfront the cut, and should we are in the camp which believes 25 basis point cut should come.
Okay, 25 basis points should come. But looking at at banking as a universe, you said you'll play banking from a manufacturer standpoint. But looking at the PSU end of the spectrum, they've done fairly well. In a weak market as well. Quite a few factors at play. Margin wise, a lot of experts say they are better placed versus private peers. They have lower EBLR loans, right? And secondly, the proposal to hike foreign limit in some of these in the PSU banking lot, that of course will come as a big boost as well. So in light of all this, how are you looking at PSU banks in particular?
So PSU banks are honestly looking very attractive right now because valuations are very low, and as you rightly mentioned, we are not going to see any shocks on the asset quality also because most of them anything what can come negative had been taken into account. There has been provisions and everything. So we believe there is definitely some upside in the PSU pack in near term. But as a policy, we are little cautious not to go all in the PSU side because there are many things which are into play. There is some OFS always lined up, or maybe can come some kind of
Hmm.
divestment can happen. So we are little conscious about that. So we do buy one or two PSU banks which we like the most, where there is deep value. But at the same time, we fill our BFSI with more of NBFCs and some of the other private banks.
Hmm. Okay, got your point. And I can't not ask you a question about IT. Of course, you guys are not very bullish on IT. Understandable, given the fact that we've seen visa curbs come by. But what is the kind of margin impact that you are factoring in as a result of these visa curbs? They are a one-time charge, right? So does that allay some bit of concern? And in terms of revenue, the top line, do you think that also gets hit? How are you looking at IT in light of the recent news? And of course, there has already been a ton of bad news. So would you still say that most of them has now been priced in? How are you looking at this whole space in particular?
So see, our money is fungible, and from that perspective, we don't have any compulsion to be in tech sector, to be honest. And that is the reason we have been negative for last 12
Hmm.
months now. We don't have much of tech, very small portions of very small tech companies, which we have bought for different reasons. But otherwise, we have exited most of our tech almost a year back, and we made very good money in the previous year. The reason is simple that we don't go by what is the growth rate and what is the multiple. So this argument that the large caps are at like 18 20 times forward earnings and all, we don't honestly believe that argument because those multiples has to be seen in terms of peg ratio, and at peg ratio they are all at 4 times. So why should we buy services company
Hmm.
which will grow at 3 4% with peg ratios of 5, and then there are always a hanging sword of some or other challenges they would face either from H1B or something
Hmm.
else comes in. So we have no compulsion, and that's the reason we believe that the large cap IT doesn't make any sense. Similarly, mid cap ITs, they are trading at 5 6 times peg ratio. We are not at all interested in them, and we do have little bit of
Hmm.
small tech companies, very small ones, where peg ratios are reasonable they are doing good work. And the reason is very simple. Prior to 2019, it was all technology transition. The preferred vendor was large names because the size of the deals were upwards of $200 million. After COVID, because of digital and quick execution, the deal sizes fell to 50, 25, $10 million. So biggest beneficiaries were the mid cap, which is like Mindtree, LTI, KPIT, which went up 10 times in just 12 months time, 18 months time. And this wave of AI, I think the deal sizes have further fallen to less than $5 million, $2 million. And the biggest beneficiary will be the small size companies which can quickly do the work and give back. So I think, this is the time when small cap tech will do better than the mid cap, and mid cap probably will do slightly better than the large cap. But given the peg ratios, we are not interested in either the large or the mid cap at all.
Okay, that's the view on IT really. But then how do Indian investors play the AI theme? Globally, of course, US, China, Taiwan, these are dominating. For us, we barely have any enablers. So, if an Indian investor has to ride this theme, should they do it via the indirect data center themes like NetWeb? I'm sure you won't be talking about stocks, but I'm just mentioning them. Stocks like Anantraj, NetWeb, these are some of the indirect plays, the data center plays, so to say. Should one look at these to ride this AI theme?
So, I have a very different view, and I'm telling you, after 25 years of my tech experience, I have run an AI company in 2008, so I can tell you from that experience also. See, the problem is that we are expecting Lata Mangeshkar to play cricket and Sachin Tendulkar to sing song. That is not right. Our economy is 140 crore people. Our strength is, consumer technology, and we will see Max 7 size companies in next 10, 12 years from India in this space, that is in consumer tech. Why we need to have necessarily be on the AI side? See, people have to see data, go in history and see the data. You check Microsoft listed in 1986 at 750 million market cap. At that time, US economy was $5 trillion. We are not there yet. So how can you expect that enterprise software, enterprise operating system, all these companies can come and become $1 trillion in next 5 years? It is not possible. Our economy, when it becomes $5, $7 trillion, then first of those such companies will come. But I still believe our consumer tech, whether it is urban company, whether it is Zomato, whether it is Swiggy, all these companies we have holding in some of them. So all the disclaimers in place. I'm not recommending any of them, but I think consumer tech is the big tech
Sure.
for us, and we should look at them very positively and think what is the strength. So this 140 crore population is the strength. This 140 crore consumer tech is the strength. We should not try to find AI in India. That is, not everyone cannot do everything, right? We are already good in autos. We are already good in
Sure.
software services. We are good in pharma. Now we want AI to be also to be very good. We can be good in consumer tech, which we are superb. I can tell you that much.
Hmm. So I think we should also tell the FIIs this, because they are not finding any AI plays here in India, which is why they are going to other nations like China, Taiwan, and which is why I think some of this underperformance, in terms of the emerging market peers, can be attributed to. But nevertheless, you're right. Of course, consumer tech, that's the way forward for us here in India. But with that, Sandip, would like to thank you for taking out time and joining in this afternoon. Always a pleasure, and I look forward to our next conversation as well pretty soon.
Thank you so much.
And of course, wish you a very happy Navratri and festive season as well.
Thank you, same to you. Thank you.
Thanks a lot. Well, Sandip Sowilo with his thoughts on the market and the sectors that are looking good and the sectors that are not looking all that great at the current juncture. Shifting focus to what the markets are doing, last 8 odd minutes to go for trade, and we are just about where we were at when we started the show. 24,610, 25-point downtick on the Nifty. Sensex also pretty flat, 100 points down. The Bank Nifty, managing to hold its head above the water, almost 200-point uptick there. Around 54,650, ahead of RBI policy, good traction in some of the banking names. PSU banks in particular deserve mention because they have been extending their gains. Again, it's a 1.5% kind of a move on the PSU bank index. Metal, on the other hand, doing good. In fact, that sector is also up in excess of 1%. Positive data from China. So that is boosting sentiment for metals. Ahead of the auto sales data, even Auto Pack is picking up speed. September sales data are expected to come in tomorrow, and most of these automakers are expected to see a jump of 6, 7, 8% or thereabouts. And of course, two-wheelers are expected to fare better. So yes, that is all about how the sectors are doing in terms of the individual movers. Then likes of JSW Steel, Ultratech Cement, Adani Ports, even Tata Motors for that matter has reversed course and is doing well now. Hindalco, Cipla, Bharat Electronics, these are some of the other movers. On the flip side, you have ITC, the big laggard today, Bharti Airtel, Trent, Titan. So some of the consumer names out of favor. But on that note, let me bring on board our next guest for today. Joining me is Osho Krishan, who's the Senior Analyst, Technical and Derivative Research at Angel One. Osho, lovely chatting with you. Looking at the market, not going anywhere. Yesterday as well, it was a 200-point band. Today, first ever Tuesday monthly expiry, but no sparks, not much volatility, I would say. Although yes, we have come off from the opening highs, but it's a story that played out yesterday as well. 24,610 or so, that's where we are placed. Where do you see the floor, and would you say that 24,791 or 792, that was the high that we made yesterday, would that act as a resistance in the very near term?
Very good afternoon, Nandita. Yes, looking at the developments that we have seen, especially on the expiry day, it is quite a dull expiry, which I can say being a technical analyst, because there has been very slender range bound movement for the benchmark index. But overall, the outlook remains on the bleak side, because this is the eighth session in a consecutive manner where we are witnessing a kind of a lackluster or a bleak closer for the benchmark index. So I expect that in the coming period, there is a strong possibility for the Nifty 50 index to close or to move towards the zone of 24,500 on a positional point of view. While on the higher end, as you have mentioned, that yesterday's highs of nearly, which even coincide with the 89-day exponential moving average, and even the sloping trend line, which was previously supporting the zone, now is acting as a very strong resistance levels. So I expect that now the range is now 24,500 and 24,800 on the higher end. So this will be the immediate trading range for Nifty. While on the lower end, looking at the technical developments, the market has already been into extreme oversold terrain. The derivative data all represents a very strong oversold terrain. Technically, also we are witnessing a very strong correction in the last couple of trading sessions. So yes, both the parameters are looking very oversold. So I expect that any further dip towards the zone of 24,500 can be seen as a buying opportunity, because from there onwards we can see some kind of relief rally in the benchmark index. But having said that, there are various counters or various indices which are performing or outperforming the market. For today, PSU banks are being one of them, which has seen a very tremendous upside potential, and major of the counters are witnessing a fresh breakout. So focus should be on thematic movers till the time we are into a strong consolidation.
Got your point. Any dip towards 24,500 could be a buying opportunity. But, Osho, just about 3 minutes left to, end the day. I want to request you for a BTST idea very quickly.
I am having a very strong focus on Bank of Baroda. That counter has given a very strong breakout, so that can be seen as a buying opportunity. For a BTST perspective, 254 should be kept as a stop loss. While on the higher end, I expect a target of nearly 268 to 270 from a very short-term point of view. So Bank of Baroda will be the first preferred pick on the long side. Second will be on a positional front. I am expecting a decent move in Vedanta. Vedanta has given a consolidation breakout, so that can be seen as a positional buy near about 465 zone. It is hovering currently. So that could be seen as a buying opportunity in Vedanta. 453 will be the stop loss. On the higher end, 484 will be the target that can be seen in the coming days.
Okay, so Bank of Baroda and Vedanta, two BTST strategies from Osho. With that, of course, just about 2 minutes left for the markets to shut. But a couple of counters I want to draw your attention to, the likes of KPIT Tech. It took a sharp tumble right after noon. No real trigger. What are you making of this move in a KPIT Tech? It's down somewhere around 7%. I'm not sure if stocks react like that there is no news flow as such, as far as I know. So, in any kind of a sudden move, what is it? Is it some kind of a breakdown? Because I really don't know what the fundamental news on the counter is. Because it did take a very sharp turn right after, I think, 1 o'clock or so. what would you attribute this to, and how are the charts looking now?
See, technically, it was at a very strong support level. The zone of 1200 was historical support for the counter, and the time it witnessed a breakdown from the zone of 1200 to be very honest, even the short traders cannot take position because of the fall that we have seen in the counter. So, but 1200 was a very strong support, and the breakdown below 1200 has given a very strong momentum on the lower end for the counter. So, I expect that in the short term period, there is a strong possibility for the counter to plunge lower. On the lower end, I expect the zone of nearly 1050 to 1080 to be seen as the immediate target on the lower end. However, any bounce towards the
Hmm.
zone of 1200 now will be seen as an selling opportunity in KPIT Tech. So if there will be any kind of bounce of 80,
Hmm.
90 points from the current levels, then that will be providing an opportunity for the short traders to take position on the short side and then can make momentum moves towards the zone of 1080 from a short-term point of view.
Hmm. All right, that's about KPIT Tech. There are quite a few other movers as well on the downside that I'll discuss with Osho. But let's take stock of how we have shut shop for the day. It's extremely flat. Again, you really have to wait to see whether it's in the positive or in the negative. But hardly any move on the index if you compare it to yesterday's close. Touch of green as of now, 24,636. That's a 2-point uptick. So if we've really ended in the green, then of course we've snapped out of a 7-day losing streak. Although the Nifty, the Sensex is in the red. Mid cap index just about managed to end in the positive territory. Advanced decline ratio tilted slightly in favor of gainers. So breadth kind of improved slightly and came in favor of gainers. In terms of sectors, banks held on to gains, 0.5% gain coming in ahead of the RBI policy. PSU banks, as we've been talking about it, it's the top sectoral mover today, followed by metals. Autos also upbeat ahead of the auto sales data. But aside of that, if you look at some of the other sectors, IT, pharma, energy, FMCG as well under pressure. Realty pack ended lower by 0.5% or thereabouts. So mixed picture, but metal, auto, and banks. These are some of the pockets that managed to hold out in a very flattish, narrow band kind of a market. But looking at the individual movers, it's JSW Steel, IndusInd Bank, I beg your pardon, Ultratech Cement, Adani Ports, Tata Motors, Hindalco, Cipla, BL, Bajaj Finance and Shriram Finance. They have managed to end and they were among the top, end higher among the top gainers on the index. Consumption names like ITC, Trent, Titan lagging, some pharma names. Dr. Reddy is not doing well. L&T continues its downward move after Friday's up move. Tech Mahindra not doing all that great. Bajaj Auto has kind of bucked the trend. It's in the red, and so are other names. Some metal names as well, like Tata Steel, ended in the red. Although the sectoral move is positive when it comes to that. Some of the private banking names also under pressure, the likes of Axis, ICICI, etc. All of them in the red. Okay, coming to Osho again. Osho, I was talking about some of the mid-cap movers. Quite a few of them on the downside as well. The likes of Subros. I want to bring your attention to this stock as well. Down 9%. It's at 1090 or so. What do you make of today's move? Do you see more weakness? Do you think it's some kind of a bearish trend that started? Because in the last 1 month, we've seen a 19% uptick on a Subros.
See, overall, there was a very strong breakout in the counter from the zone of nearly 980 to 1000 kind of a zone in the recent period, and with the kind of momentum and with the kind of vertical rally we have witnessed, so it is quite obvious that there can be some kind of profit booking at the higher levels. So there is no sign of caution on the technical front as of now. If there will be further movement towards the zone of 980, 970, that should be seen as buying opportunity for the counter. Any dip towards 980 can be seen as a buying opportunity. So one can look for adding more position in the counter because overall the technical structure remains on the higher end, robust end. So I expect that dip should be augured well for the buy.
Okay, that's the view on a Subros. But there are some other stocks that I want to bring your attention to, and that's Tata Investments. That was the top NSE 500 gainer today. It hit a fresh 52-week high as well. It has been in a strong uptrend. Of course, ahead of the Tata Capital IPO that opens next Monday. What do you do with the Tata investment now?
See, Tata investment is now 55% on the higher end in September month. So technically, the counter is extremely overheated. So at current levels, the risk reward is definitely not favorable. The counter have already seen a very drastic upsurge from 7,000 now hovering around 10,600 kind of a zone. So at current levels, definitely not a buy. But those who are holding the position, they can definitely stay intact with their investment. The breakout zone of near around the zone of 9,600, 9,700, that should be kept as a trailing stop loss for the counter, while fresh position should be taken only if there will be any kind of profit booking or correction in the coming future. For now, if those who are holding position, they should only remain intact with the investments.
Okay, keep holding on, but risk reward not looking all that great on Tata investment. But last couple of stocks then Blue Dart, has been in a downtrend. Today, of course, it did well, but it kind of fizzled out as well. So, today's move, would you just call it a technical bounce, or does it indicate any kind of reversal?
See, overall, the counter is at a very strong historical support. The zone of nearly 5,500 historically have seen a strong push, historically has provided a strong cushion to the counter. So I expect that any tip towards or any sustainability towards the zone of 5,500 provides a decent amount of buying opportunity in the counter with a favorable risk reward ratio. While on the higher end, the conviction will come only once it surpasses the zone of 6,000 on a decisive and sustained manner. Then one can look for aggressively adding positions in the counter from short-term point of view. And once it surpasses the zone of long-term moving average, which is currently hovering around 6350 kind of a zone, then we can see some kind of counter trend in the coming period. So now 6,000 will be the first resistance, followed by 6,300, above which one can become bullish in the counter.
Okay, that's about Blue Dart. But with that, we've come to the end of this segment. Then, Osho, we spoke about BTST strategies, but any other stock that's looking extremely appealing on the charts and that could be bought into for the next 2 or 3 weeks? Anything that's on the horizon?
There are many counters which are looking very positive to me. For example, SBI cards, it is placed at a very strong support zone, so that can be seen as a positional bet from current levels. The counter have seen a kind of reversal pattern from the zone of 820 and now is hovering comfortably above the long-term moving average. So I expect that in the coming period there is a strong potential in the counter to retest the zone of 930 to 940. So this counter can be seen as an accumulation phase. It is having a very strong support around the zone of 850, so that should be kept as a stop loss. On the higher end, 940 should be seen as a target for a positional bet.
All right, SBI card looking good on the charts. With that, Osho would like to thank you for taking out time and joining in this afternoon and sharing your thoughts. No fireworks on streets, but wishing you a very happy festive season, happy Dussehra, and I hope things get better in the market pretty soon. But look forward to our next conversation as well. Thanks a lot for joining in.
Thank you so much. Thank you so much, Nandita.
Thanks a lot. Well then, let's shift focus then to the big cue for the market tomorrow. That will be the RBI policy. Of course, we are counting down to 10 a.m. tomorrow when the governor will announce his rate decision. Expectations, of course, are ranging from a 25 basis point rate cut to no rate cut at all. The street is deeply divided. One section believes that a cut of 25 basis point is needed to support growth at a time when, of course, when there is a demand uptake, companies would like to look at expanding their capacities, and at that point of time, of course, a 25 basis point rate cut would only provide the support that they need. But some argue that the RBI governor should wait and watch and see how things pan out on the global front, even though there is inflation comfort domestically. What would happen on the tariff front given the recent developments around tariffs on IT and pharma. some believe that it would be prudent for the RBI to wait and watch before really doling out a rate cut. But experts do believe that there is a 25 basis point rate cut still left in this rate cutting cycle that could either happen, if not tomorrow, either in December or February. But the unanimous view is that there is one more rate cut that may come. Of course, there is no real growth concerns. That's what, there is a belief when it comes to a certain section of economists. They believe that first quarter GDP, of course, came way above estimates. I was chatting with Lata Venkatesh today, and she said, going by the arithmetic, the governor should, revise the growth forecast upwards to 6.7% from the current 6.5%. So that could be something that may come by in terms of the forecast. In terms of CPI inflation as well, there is a need to cut the inflation forecast for FY26 from 3.1% to 2.5%. But the key to monitor would be the inflation forecast for the first quarter of FY27, I think, which now stands at 4.9%. Given the GST cuts and the comfort that's there on the inflation front, Street will be watching out for whether that is brought down to somewhere around 4% or not. So if that happens, that would be taken up as a positive signal. Of course, the change in stance is something that a lot of analysts have been talking about, but that could be not on the cards, according to my editor Lata Venkatesh. She said that since the stance was changed to neutral very recently, that's something that the RBI may not do just yet. So that's another thing that the market will be watching out for. But all in all, the market will be looking for dovish signals from the governor's language. So it's the language that takes precedence, irrespective of whether there's a rate cut or not. Well, that's something that we'll be watching out for tomorrow at 10 a.m. And of course, we'll be getting you live coverage of the RBI policy, extensive coverage, so you can't afford to miss it. But on that note, let me bring on board my colleague Yatin joining in then. Yatin, what a damn squib expiry day for the market, right? It was extremely flat once again. I think it just managed to end in the positive. Last time I checked, when it shut, it was mildly positive. No, it ended in the red.
20 points down, and the morning start was quite robust. Gold also opened at all-time high, but you have the benchmark indices sliding almost 20 points at close, and gold also nearly 2,000 down from the day's high. So yes, across the board we are looking at some profit taking and fund flow changes which are happening, and yes, India has been a stark underperformer versus other emerging markets, other European and American markets. So yes, that underperformance still continues and continues to haunt traders and investors.
That's true. I think that a lot of weakness can also be attributed to the fact that it's the end of the first half of the financial year. It's the end of the quarter, end of the month. So a lot of portfolio cleaning may be happening, which is why people may be selling as well. But Yatin, of course, aside of the RBI policy, what we'll be watching out for is the auto sales data, and it becomes extremely important, right? Because September was a mixed month, there was Shraddh, then of course the big GST cuts kicked in, and then we heard companies say the kind of inquiries that have come by, huge.
Yeah. So I'll take you through the Nomura estimates for auto sales. Most importantly, as you mentioned, the expectation is that the numbers will be strong. But do remember, after 15th of August, there was anticipation that there will be a GST cut. So a lot of shipments from the OEMs at the wholesale level, which is the dealership level, already happened. Now, what number we are talking about? The sales from OEMs, something like a Maruti, to the dealership. And what dealership sells to the end consumer is retail sales. We are talking about the wholesale numbers. So there was sufficient channel inventory already in the month of August. That kept building in the month of September, and we also had a big dispatch which happened, in the month of September because of the Navratri season, coupled with the GST cut. Now, if you talk about the numbers, yes, this time four-wheeler players will benefit the most, given the fact that the affordability factor has gone up. Not that as much it matters for the two-wheeler segment. Yes, premium two-wheelers will see a sales bump up because the affordability moves up there. But, more to do with commercial vehicles and four-wheelers, where we could see the maximum benefit come in for the month of September. Now, if you talk about Ashok Leyland and Tata Motors, there we are expecting 7, 10, 12% kind of a growth at best. Ashok Leyland would be delivering numbers close to 18,400 units. Tata Motors 80,000 units is where they would look like in the month of September. But talking about Maruti, M&M Auto, 2 to 5% growth is what you can expect there. The base is quite high. Last year we saw some good numbers also come in, new launches, especially in the case of Mahindra and Mahindra. So don't expect a big jump up. but do expect a good number for Tata Motors, Mahindra and Mahindra tractor segment, and Hyundai Motors. There we could see, double-digit PV growth coming in, which is the passenger vehicle segment. Shifting gears to the two-wheeler space, we have Bajaj Auto, Eicher Motors, Hero Moto, which will deliver good numbers, but the thunder will be seen in the Royal Enfield sales for Eicher Motors, wherein we are expecting a 55% jump, 14% growth for TVS Motors, which will post sales number of close to 5.5 lakh units odd. For Hero Moto, that number will be 6 lakh units, and for Bajaj Auto, that would be almost a 5 lakh unit kind of a sales number.
That's true. But I think the kind of up move that the auto stocks have already seen in anticipation of the GST cut, most of the analysts, they feel that 80 to 90% is already in the price. So we'll have to see valuations wise, where we are really poised when it comes to auto names. But IT has, really been hogging the limelight, especially after the visa curbs. Large cap IT, mid cap IT, all alike have seen quite a bit of a badgering. But today we had a positive note from CLSA on Coforge. They already have a high conviction outperform on persistent. Now they have initiated coverage on Coforge with an outperform rating, and target price is quite high at 23.46, which implies an over 50% upside from yesterday's close price. Now, what has led to this initiation and such a bullish target? They believe that the levers for growth are there for Coforge. It is already among the top 10 Indian IT companies in terms of revenue. And 2/3 of its overall top line growth comes from two verticals, that's BFSI, financial services, which is already doing well, right, in the US, and travel verticals as well. And the execution that the capabilities that the company has built is already very robust. So it believes that that could lead to strong order book, strong earnings, as well as strong revenue growth for Coforge going forward. And in terms of the projections, revenue CAGR, the compounded annual growth rate for revenue for FY26 to FY28 is seen at 15%. For its EBIT, it's at 16%, and EPS growth of 22% compounded annual growth rate over FY26 to FY28. So these are some good double-digit numbers that are being projected by CLSA. And of course, if you look at the stock movement, despite a 20% crack on a year-to-date basis for Coforge, it is still the top among the top 4 performers on the Nifty IT index for the year. And quite a few analysts still have a buy call on Coforge. Around about 39 analysts who cover the stock. Out of that, 28 of them have a buy call, and these mid-cap companies, they are the preferred contra bets within the IT names. But, I was talking to Sandip Sowilo just a few moments ago, and he said that, he would not look at IT at the current juncture because, people talk about valuations, etc. But for low single-digit growth, if you pay a price to earnings growth, PEG, of 5x, then that's really not worth it. That's what he said. But I have heard quite a few contra calls on mid-cap IT in particular after the US visa curbs came by.
But I think Coforge and Persistent, these are the two stocks in the mid-cap IT space have done well. But on the valuation front, there has always been discomfort in both of these stocks, but still they continue to perform. Whether or not they meet CLS's tall target of 2400 odd is something to be seen. But yes, Persistent and Coforge, these are the two stocks to watch out for in the mid-cap IT space.
All right, those are the two stocks to watch out for. Of course, it's a truncated week, but before that holiday, we have a lot of work to do because tomorrow it's RBI, auto sales data, etc. And the street will clearly react to both of them. So, busy day ahead tomorrow. But today, in terms of expiry, not that great, flat close. And I think we are just up somewhere around 0.5% in the September series. But let's hope October being the festive, in the thick of the festive season, hopefully there will be some festive cheer returning to the Lal Street pretty soon. But with that, we have completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. I'll see you tomorrow morning at 9 a.m. on Opening Bell. Don't forget to tune in. Have a great evening. Thank you.